Hello traders, it is Wednesday, September 10th, 2014, 8:01 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the what's driving things here overnight potentially. Key element, J.P. Morgan has put out a report suggesting that a weekend speech by Boston Fed President Rosengren has raised the possibility, in their opinion, that the Fed will modify its quote-unquote considerable time guidance at next week's FOMC meeting. Why is this important? He believes that it should be linked to economic variables rather than steering the market towards the approximate timing of rate hikes. So they're looking for the Fed, and they put a 50-50 chance on this for next week. They're looking for the Fed to move away from this considerable time thing where they're basically telling the market to just relax about interest rates and not worry about it, to tying it with unemployment rates and a 2% inflation rate, which could be a lot sooner. So Rosengren is generally dovish, and he's moving towards the camp of Plosser, who's generally hawkish. And this is a shift. This represents a potential shift in perspective by the committee. So this is going to be very important for next week's FOMC release, and of course the debate by the committee on what to do next. But if considerable time is taken out from the policy statement, you'll likely see a market that would react strongly to the idea that the Fed is raising rates more quickly, as the economic numbers have been fairly strong. UK President says it's difficult to maintain a ceasefire. Rebels keep provoking government forces. Government's regrouping forces in the east to defend territory, not to stage new offensive. 70% of Russian troops are removed from the Ukraine, but there are conflicting reports that say in other areas there are more and more troops and weapons showing up. So maybe the Russian troops are moving to another territory rather than moving out of the Ukraine. I'm not sure. Yesterday, for those of you who maybe were in a coma or something, didn't hear about the Apple launch. Apple launches iPhone 6 and 6 Plus and a new Apple Pay payment process. It also introduces the Apple Watch, which is going to be on sale early next year. The stock initially rallied but finished 0.4 down, 0.4% down, and you'll see that action in. We'll look at that in a minute here. You'll see that action in a pronounced way in the NQ. Caution is prevailing among investors over concern of less accommodative Fed. So this is the main theme here. The caution starting to creep in as far as how much more the economy will grow. There are those who are monitoring the dealers who are monitoring the fixed income auctions and so forth have been relishing the recent spike in volatility from historical low levels. The question is whether a fundamental change is now upon the currency markets, with perhaps a multi-year recovery for the US dollar. One major analyst noted that the extent of the moves and the lack of correction were consistent with a long-term change in currency market trends. The US dollar-Japanese yen pair continued to hit new 6-year highs as the pair moves towards 106.70. So we just, why is this important? Why am I reading this to you? You just need to be aware of what underlying currents there may be that we're swimming in here as we trade, and those are the themes that are potentially controlling or could control that flow. Finally, France pushes back meeting its 3% budget deficit to GDP target by 2 years until 2017. It says it's just not possible for it to meet its requirement on time. I still think I'm on the same camp as Ray Dalio. I still think France is the largest, is the biggest risk to Europe currently. As far as daily economic releases at 9 o'clock today Central, half hour after the cash open. We have wholesale inventory 0.5%, wholesale trade sales 0.6%. At 9:30, just a half hour after that, we have crude oil inventories at negative 1.5 million barrels. Distillates expected at plus 1 million barrels, and in gasoline at 0. Then a half hour after that, we have ECB's Prate on EU economics and ECB's Mersch on an undisclosed topic. And then at noon, we have a 10-year notes reopen for 21 billion. So those are the key elements of the day. Let's look at our technicals. And as always, those of you who have been following these Trader Bites probably are maybe bored with the fact that I follow the same exact routine. Now, there's a reason for that. You are, as a trader, you are the sum total of your habits. In fact, as a human being, you are the sum total of your habits, and my habits don't change abruptly. I'm very consistent with what I do, and in fact, they do change over time. I add things, I take things away, but when I do, it's for a definite reason, and I stick to it. And that helps keep things more simplified. Simplicity in trading, right? So let's look at what the market has done. So essentially, we've gone into balance here. Let's turn this back into a hologram. We've gone into balance here after breaking on the 25th to new highs, and balanced out, pulled back to close the gap that was left behind. Very systematic trade there, and then the market, we close the gap to the tick, and then the market starts to move upwards to 2010. Once it hits 2010 on that day, it finds sellers. Sellers come in aggressively. We get a pretty good negative delta on the day, but note that by the end of the day, we're basically back to even on the delta. The next day, we open in range, test lower to 88 and a quarter, which brings us back to this gap close and where we were on the 28th, just by one tick, and then that's where we found buyers. So we found sellers at 2010, we found buyers at 88 quarter, and we pushed all the way up to close with a pretty poor high on this day. We still have a poor high at the high. I know bears are salivating and thinking that this is it, but to me this is no different than all of the other times that we made highs, fell off, tried to make another high, and then pulled back before the market pushed higher. And if you look closely, we've been doing that at the beginning of the month fairly consistently over the last few months. So to me, this is a temporary pullback. This does not represent much at all. Remember, 1% pullback in this product doesn't mean that the trend is changing. So yesterday we opened in range. Remember yesterday I said that to keep an eye on this. We are in balance, but the point of control keeps creeping down, so I'm expecting lower. Yesterday's hypothesis was that we would break the overnight low. We might attempt the 2050, 2000.5, but we're likely to push lower as the market is consolidating into a pullback, and it's likely to do so to find buyers to continue to take out this weak high. And then I mentioned the target of 2013.50 above. So what it did yesterday is it followed Hypo 1, pushed lower. The key target below was 91.50. Took that out fairly early on the second bar, 15-minute bar. Chop, and then the Apple media event kicked in. The NASDAQ shot up. If you look at the NASDAQ right here, NASDAQ just responds very positively to the media event, and then just drops pretty strongly. After that, the S&P trading in sympathy here. We finally get through and close the point of control at 86 and push down into 83 and a quarter. So when I go back in time and look at 83 and a quarter, there's not much here to play with. But just below is 8150 CHVN. It's an area that comes from way back here, but there's not much there at 83 quarter. It seems like the market was just reacting to movement elsewhere. So far, the low that was put in seems like an excess low. See it in the profile here, single prints all the way down, about 8 single prints, and volume just non-existent near the low. So this looks fairly decent. The overnight tried to test lower, but didn't really get anywhere. So right now the market is still in a cautiously bearish stance. But this is normal after balance. It's normal for the market to have to pull back. Remember, the markets drop not to entice more sellers. The markets drop to find buyers. So that's important to remember, that the market is generally drops in pursuit. It's auctioning. It's trying to motivate buyers, and as it drops, the weak hands, the weak longs, start to become sellers. But really what the market's looking for are firm buyers, and it may have found them here. I'm not sure. This morning, my plan, my primary trading idea, is that since it's opening just on the edge of yesterday's value, the value of yesterday is fairly valid. It's opening on the edge of value, and it could easily push into the lower high volume node. My plan is to just sit on my hands for the morning, just wait for the market to do whatever it needs to do. You can see here on the overnight, even though we pulled back on the close yesterday and pushed higher, the market drifted lower overnight, but then it finally tested the point of control above and has found sellers. The point of control for the overnights below us. Volume in the overnights fairly decent, 215,000. So the overnight volume has been coming back slowly. Remember, it was trading at about 110 to 130 all summer, and now it's at 215. So the overall volume is coming back. That's a good thing. But this profile is not telling me much at all. Overnight inventory is neutral. There's really nothing here that's telling us that that the market's skewed one way or another. So I'm going to sit it out on the open and see what the opening swing brings, and see which side is able to be the aggressor. I'm leaning on the idea that it's more likely to be responsive and push into the 92.25 and take out the overnight high and start working itself back into this 95, 98.50 area up above. But we'll see what happens. We're at 88. That's 10 points up. So the extent of it will probably be this 98.50 or so, which was yesterday's OS high. Yesterday was a neutral day. It did not close on the extreme, but it was definitely a neutral day. The market was indecisive, but then it was also driven by a news event. Apple represents a big chunk of the Nasdaq and a decent chunk of the S&P, so the market was basically trading the Apple movement, and it was definitely very, very whippy. Okay, so that's what I'm looking at for today. I strongly suggest that you just sit tight in the morning, wait for an indication of which side is dominant, and then try to find your areas of interest and trade from that side. Remember, we have a number at 9, crude oil at 9:30, and those ECB speakers at 10. So just be cautious. I'll leave you with that. Hopefully this is useful to you. I still need your likes. Please like the video when you're as you're watching it. There's a little thumbs up button or something on YouTube. please go ahead and hit that. It costs you a click. I'm not asking you for money. Just hit it. I'm still pushing to upgrade this broadcast to 1080p. I have an email out to them. I think it'll be better for you to watch this in 1080p so that you can see the numbers more clearly while the live broadcast is going. And your likes will help initiate that change from Google and YouTube. Appreciate your help, and I'll talk to you soon. Take care.